reference of what a pullback is. I believe a pullback is when we have a minimum, let me just write this down for you guys, 2 candles that trade opposite. All right, so a minimum of 2 candles trading in the opposite direction. So now, can anybody show me on the chart 2 candles that are trading opposite consecutively? I'm sorry, that is a very important point. Consecutively. 1, 2, right there. Okay. We have here 2 consecutive bars trading, or actually I have 3, but all I need is 2. So let me just be consecutive. Okay. This will be my definition. Remember, black and white guys trading. My definition of pullback is 2 consecutive candles. We have that there. The first green candle that goes back in the direction, we're above the Atlas line, I want to take it long. All right. So to clarify, I have my definition of a pullback is 2 consecutive candles. We have it here. 1, 2. Let's just take a look here. 1, 2. Minimum of 2. The first green candle that reaffirms the trend up, I'm going long, right? Simple, right? Pretty good. Now, let's take a look at what happens when we have another pullback. Would you guys consider now this to be 2 right here? What do you think? Yes, no? You think that's 2 consecutive candles pulling back? Right, Richard? Absolutely, Richard. Yes, right? So what that means is the next candle, we go long. And what do you think about this over here? We don't see the chart, what happened, the result. So let's just say that we don't know what the result is. We have here 1, 2, 3. We have a green candle right here. We're long. Right, guys? We're long. There you go. Okay? Now, there is a caveat. There is a caveat. This all looks great, but remember, just because it's a pullback doesn't mean that price is going to go higher, right? How many times have we taken pullbacks and the price just keeps on going lower? So, let's be smart about this. Let's use price and price action to our advantage. James, when you come to the how-to webinar, I'll go over this in more detail, James, but really the essence of it is make sure that your entry is higher than your double bar long, which happened back here, your initial Atlas line entry. And when the next time around we have an Atlas line pullback, make sure that your entry long is higher yet from your previous pullback. And now let's talk about this right here. Is this higher or lower than my previous Atlas line pullback? What do you think, guys? Higher, right? So really what I'm doing is I'm making sure that we don't have, let's say the price goes down and we have a pullback. Let's say the Atlas line is all the way down here. I don't want to see this. In order for a trend up or down to be a correct trend, our entries need to be higher to our previous entries, right? Exactly. Wow, you guys are on the ball today. Very good. Lots of good questions. Fantastic. So again, stay away from moving averages. Stay away from indicators that we have to optimize. The Atlas line gave me this long, and then it gave me the pullbacks. All right. Let's take a look at what we're happening here. So right now, currently live, as we speak, would you guys consider that a pullback? Right there, 1, 2. Absolutely, right? Absolutely. So we have to have a minimum of 2 candles. Is this entry short higher or lower than my original double bar short? Lower. that means that we are still doing this. That's what it means. If this was higher, it would not give me a faith or confirmation that this is a downtrend. Okay, guys? Very good. Excellent. Tony says you keep going long as it's above the Atlas line. Absolutely. You keep on going short as long as it's below the Atlas line. Works the same exact way. All right? Daniel, how you feeling, Daniel? Daniel Seabag. Hope you're feeling better, buddy. All right. So, great, Daniel. So I want to make sure that each trade that I take corresponds above or below the Atlas line. Each Atlas line pullback, I'm not going for ATR. I'm just going for a point because it's a fast in and out. Okay. Stops. Let's talk a little bit about stops. I have, over the years, realized that many traders that I mentor and that I talk to, stops are a big issue. So I want everybody to realize that there's a better way to handle stops. Sure, we can have a catastrophic stop, but I don't believe that having a hard stop is the way to trade, because what we're saying to the market is saying, I have my stop, now come and get me. Instead, I've always heard that traders want to trade with tight stops. Well, trading with tight stops is never going to help you. You're always going to get stopped out only to see the market potentially go in your favor. So instead of seeing tight stops and constantly getting hit stop after stop, let's have a little bit of a larger stop to keep us in the trade. The idea is to keep us in the trade and allow price to fluctuate, and having a profit target that fits the criteria. But let's say that you enter a trade, you have your ATR down here, which is at this point is just a 1 point here. Right? It's just 1 point on this trade. But let's say that we don't get a 1 point. Let's say that as soon as you go short, it whipsaws back and forth like this. Okay? When you look at a situation where it goes nowhere, have you ever thought, how long am I going to stay in this trade for? What am I going to do if I stay like this for an hour or 2 hours? Okay? Well, I've used for a very long time a time-based stop. And a time-based stop is telling me that if I do not make my profit target within a set number of bars or a set time, then I am not going to continue with the trade. Really, that's what it comes down to. I'm not going to continue with the trade. I am going to instead, I have two E-mini charts here, I think. Instead, I'm going to get out of the trade because I allowed the trade to enough time to work in my favor. Okay? So when I think about how long I'm going to take in a trade, how long I'm going to be in a trade for, I think of that as a stop in itself. So as an example, on the E-mini here, all I want is 1 point on this Atlas line pullback. But if I didn't get this 1 point, if within, let me just write this down here for you guys to see, time-based stop, if within 4 to 5 bars, I have not been filled, profit or stop, I am out of the trade. Small loss, small win, or break even. You're out. Because now what just happened is the price told you that you have a correct order to go short, but yet it didn't go short. It went long, or it ranged. Ranged means it just goes back and forth like this. Back and forth, back and forth. All right. There is nothing that I could do that would tell me it's going higher, it's going lower.